The insurance-linked securities market, or ILS for short, is at a really fascinating point right now. So today, we're going to dive deep into the biggest conversations from the recent Artemis ILS NYC conference. We'll break down where the market stands today and, maybe more importantly, where it's headed next.
First off, just to set the stage, let's talk about the sheer scale of this event. This wasn't some small gathering. We're talking over 450 specialists flying in from more than 25 different countries. I mean, that number alone tells you everything you need to know about the global momentum and the serious interest building in this space.
And all that energy brings us to this exact moment. The feeling at the conference was unmistakable. The ILS market is healthy, maybe the healthiest it's ever been. But it's also at a crossroads. There are these incredible doors opening for growth, but walking through them means navigating some pretty big challenges.
So here's how we're going to break it all down. We'll kick things off with the private side of ILS, then jump into a pretty fiery debate about whether the market's tech is ready for the future. After that, we'll look at the balancing act in the booming cat bond space, check out some really cool new areas for growth, and then wrap it all up by looking at the road ahead.
All right, first up, the private ILS market. This is where deals get done behind the scenes. And after a period of just fantastic returns, the whole conversation really boiled down to one thing: discipline. How do you maintain it to build real, lasting trust with investors?
And this is where you see the real tension in the market right now. On one hand, performance has been great, the pricing environment is healthy. But on the other hand, the panelists were really clear that raising new capital is still a grind. So, what's the solution? Well, it comes down to being super disciplined with your portfolio, being transparent, and constantly educating your investors.
This quote just nails it, right? This was the absolute core message. In a market built on complex risk, the only way you build that long-term trust, the kind that gets investors to stick with you through thick and thin, is through consistent, disciplined management. It's everything.
And that idea of discipline leads us right into our next topic, technology. This panel was apparently pretty passionate. Some even called it spicy, because it hit on a really fundamental question about the market's basic infrastructure.
And this was the big question hanging in the air. With more deals and more complexity than ever, is the actual plumbing of the ILS market, the data, the platforms, the processes, is it really ready for what's coming? And the consensus seemed to be, well, it works now, but it's starting to creak under the pressure.
So the panel mapped out these key areas that need work. Now, let's be super clear here. Nobody was saying governance in the industry is bad. Far from it. The general feeling was that it's actually quite strong. The real bottleneck, the thing slowing everything down, is the flow of information. Things like standardizing data so that one system can talk to another without a million headaches. That's what's needed. Better data flow and more transparency to really help everyone make smarter decisions as this market gets bigger.
And this just perfectly captures the urgency of that whole debate. Whether it's using AI to automate the boring stuff or just building better tools, the message was loud and clear. The biggest risk isn't trying something new and getting it wrong. The biggest risk is doing nothing at all while the world moves on.
Okay, so from modernizing the pipes, let's talk about what's flowing through them. Catastrophe bonds. This part of the market is absolutely on fire right now, but its success all hinges on this really delicate balancing act between the people who issue the bonds and the people who invest in them.
It really is like two sides of the same coin. You've got the sponsors, the insurers, who need a reliable source of capital to back up the promises they make to their clients. But then you have the investors, and they need strong returns. They need to be able to sell their bonds if they have to, and they need to know the deals are structured properly. The whole market only works if both sides are happy.
And the ambition here is, well, it's huge. The panelists are seriously talking about a $100 billion market by 2030. That is a massive leap from where we are today, and it just shows you why getting that balancing act we just talked about is so critical.
Okay, so if the main market is growing like crazy, the next question is obvious. What else can we do with all this capital? And this brings us to what was maybe the most exciting part of the conference, looking beyond the traditional risks and expanding the ILS perimeter.
Yeah, we are moving way beyond just hurricanes and earthquakes. People were talking about massive opportunities in things like cyber risk, other specialty insurance lines, and even financing brand new needs. Think about the crazy amount of money needed to build all the data centers for AI. That's where this is all heading. It's pretty wild. But, and you could hear this sentiment over and over again, as the market pushes into these new, more complicated areas, that word comes up again: discipline. The need for smart, careful underwriting is more important than ever. You just can't let growth get ahead of responsible risk-taking.
So we've talked private ILS, we've talked tech, cat bonds, new frontiers. What's the big picture here? What does it all add up to? Let's try and pull all these threads together into a clear path forward for the industry.
At the end of the day, it really comes down to these 5 things. And you'll notice they touch on everything we've discussed. It's about staying disciplined, building trust by being transparent, keeping everyone educated, upgrading the technology, and, this is a big one, doing a better job of telling the world about the positive impact this industry has.
So the final takeaway is this. We're looking at a market that has truly grown up. It's not some niche, weird alternative anymore. It's healthier than it's ever been, and it has this really smart, deep pool of investors who aren't just funding its growth, they're actually pushing it to evolve and innovating.
And that really leaves us with this one powerful, final question. The market is mature, it's a vital piece of the global financial system, but you get the feeling its story is far from over. So the real question is, just how big can this thing get? What is its ultimate potential? It's going to be fascinating to watch.